We've been talking about exposure identification using the financial statements of an organization. And we've said throughout this course, and really within all of the CRM courses, how important it is to build communication and coordination with other people within the organization, no matter what their role is, to help you with exposure identification. Risk managers don't live on an island by themselves. If you're thinking that you can just sit in your office and be a good risk manager, well, that's just not true. You have to get out and speak to other people and to keep your ear to the rail, as it were, in identifying exposures. There's a story that I like to use. It's actually the story of another faculty member who was a risk manager for a very large university. And this university was well regarded throughout the country. And he, as a risk manager, is a very sharp guy. And he felt he had pretty good relationships with everybody in the university. He had worked hard on building business relationships with all areas, from the academics to the administration and even the support staff and maintenance staff of the university. So the president of the university and he were known to each other. They socialized occasionally, and they were walking along the sidewalk, and across the property or the campus of the university, across from it on the street over, was a high school that had been closed, actually, because the population was not sufficient to support it. And it had been there for a number of years. And so the president said to the risk manager, hey, we bought that high school campus about 6 or 7 months ago because we wanted to have the property. And since it's right across the street from our campus here, it seemed like a good idea. And so the risk manager, is grabbing his chest and trying to catch his breath because he had not known anything about it. Even though he's a very sharp guy, and there had been no insurance, no coverage whatsoever on on these buildings, although they were vacant, and the property itself. The fact that it was owned obviously by the university would make them liable for anything that happened there. So the risk manager, took care of that immediately and had to go into specialty markets because not only the age of the building, but also the fact that it was vacant at the time. So no matter how good you are and you have good communication with everybody, you still have to ask questions as you go along and realize that the administration of the university, the leadership of the university in this case, did not even think about insurance or liability resulting from this new purchase. They just thought it was a good deal and it would be a good move for the university itself. So it's a lesson to be learned by all risk managers, is to never assume that you know everything about what's going on.